Hello, this is Nedu, your forex coach. Today, I would like to do a very important video for you, and the title is Chart Patterns and Analysis. And this has been identified as a banker's trading strategy, how the big institutions trade the financial markets. All right, we've done quite some videos and for you before now on strategy, but today, this particular strategy has up to 90% success rate, meaning 9 out of every 10 times that you apply this strategy rightly, you are going to have a trading success. So it's important you pay very close attention to all that we are going to discuss on this strategy, chart patterns, and the analysis. Okay. Now, chart patterns are one of the most effective trading tools for traders. Okay, they are pure price action based. There are no technical indicators or anything to add to it before you can take your trading decisions. And they form the basis of underlying. They form on the basis of underlying buying and selling pressures. Chart patterns have a proven track record, and traders use them to identify continuation and reversal signals, to open positions and identify price targets. So there are two basic things here that traders use chart patterns to do. They identify continuations and also identify reversals. Okay, and these can be applied only in the context of a trending market. Okay, a market that is either trending upwards or is trending downwards. And in that market environment, we would like to see some patterns that the market will present to us, some chart patterns the market will present to us that will suggest price continuation in the underlying pattern, underlying trend, or price reversal from the underlying trend. So we're going to discuss these under these two basic categories: continuation patterns and then the reversal patterns. Continuation patterns, there are two types of continuation patterns really. We have the bullish continuation patterns and the bearish continuation patterns. Of course, the bullish continuation pattern, they form in an uptrending market, while the bearish continuation patterns, chart patterns, form in a downtrending market. And these are those patterns. We have the flag pattern. We're going to show you these patterns and then discuss on how you can trade them: the flag pattern, the rectangle pattern, the wedge pattern, triangle, cup and handle, and then you also have the inverted cup and handle. All right, so the flag, we have the bullish flag and of course the bearish flag. Bullish rectangle and the bearish rectangle, depending on which market environment that it is formed. So if it's an uptrending market environment, you call it a bullish flag. So if it's in a downtrending market, call it a bearish flag. So it doesn't matter which direction the market is taking, whether it's moving upwards, trending upwards, or it's trending downwards, you have a trading opportunity. In really, trading chart patterns involves you to identify continuations in the market, identify trends in the market. Is the market trending upwards, and is it that the market is trending downwards? And to do this, you have to take your charts to the higher time frames. From the 4-hour time frames, 1 hour can be acceptable, but 4 hours, then the daily, weekly time frames, you'll be able to see very more clearly patterns that the market is projecting. All right, so the basic thing you need to do when you're trading is just look at the chart, check the instruments you're trading, go to higher time frames, find out what is the market environment that I'm seeing right now. Is the market trending upwards or is it trending downwards? So whichever direction, if you decide that, okay, this is a trending market, all right, where is it on the trend? Is it about going to reverse? As the trend lasted for more than 2 weeks, 1 month, okay, 3 months? A trend can have a year, think should be 2017. AUD USD trended, it ended in the downward direction, downtrend from January to December. So you see, those trends can be, market trends can be that long, okay, but it's important you also find out how long has a trend been, so you'll be able to know what you should be looking at for, whether continuation patterns or charts or reversal patterns. All right, okay, now we talked about the flag, right? This an example of what a flag looks like. It can also come downwards this way. This is how it looks like. Okay, this is the flagpole. You can see what is happening. Okay, this looks like an impulse. Of course, it is an impulse from here to this point is a price impulse, and all the thing that is you're seeing here, they are corrections. So we can say that chart patterns, all right, continuation patterns, they are corrective structures. They are corrective structures. So you find them within the context of correction when price is making a correction from an impulse. So that's where you locate them. Okay, because market makes these impulse correction, patterns all the time when it is trending either upwards or downwards. So it makes an impulse and then it will do a correction, a retracement, and then continue in the underlying direction. So, but in this case, this is a typical flag, typical bullish flag, because market is trending upwards. This is the impulse. Here, the market did this correction. 1, 2, 3, 4, 5. It can be just 1, 2, 3. All right. It really doesn't matter if you're counting the waves. Okay, provided the shape is like a flag. So you can join, you can see these two lines, all the lines you are seeing here, you are the one to draw them. Okay, the upper line is the resistance line. You see that you draw it to join all the candle, either the bodies or the wicks, and then the lower line here is the support, okay, line, the lower trend line or upper trend line. The upper trend line actually is the resistance, while the lower trend line is the support. All right, so when you have this setup, this is a typical trade setup. You have these, if you're trading on TradingView or any other platform that you are doing analysis or you're trading on, this upper trend line, you can put you can put a timer there. Okay, you can put a timer there that will beep, to inform you that price has broken this line at this point. Or if you're watching it, you can watch it closely. Put close eye on it until there is a breakout. So the moment the market breaks out, all right, don't be in a haste. Most of the times the market breaks out structures, it breaks out either from support line or resistance line. There is always a retracement. That retracement sometimes can, be a price return to the previous level. But in this case, there is a lot of momentum. There was no price retest at this previous level of resistance, but there must be a retracement. So trading it depends on the time frame. If this is 1 hour time frame, you can move your time frame to lower time frame. You find out that there's some other structures in this big candle that will show you that market has moved up and maybe returned back to this point before going backwards, or it returns just halfway before going backwards. Look for an opportunity to trade the market, or you can wait for this major drop here, all right, and then take a trade from this point, and then your market moves. So this is a bullish flag chart pattern. You'll find this in an uptrending market. So let's move on. This is the opposite. Here is a bearish flag chart pattern. Price, you can see it dropped so rapidly from here to this point and starts to make correction. You see the previous chart we saw, the flag we saw, it had about 5 waves, but this one just 3, 1, 2, 3, and these typical of flags gives you this kind of pattern, 1, 2, and 3. After that, it just moves in the underlying trend. So the trend is bearish. So when you find this setup, all you're waiting for is a price breakout from the lower trend line. This time around, it is the support. So a breakout from here will give you a trading opportunity in the bearish direction. All right, so this is so important, and it's very easy. I try to tell you to keep your strategies easy, make it simple. All right, don't complicate it. And of course, in entering the market, which is a very, very important training you must undergo, I have a video on that, the best entry techniques. All right, things that you have to look out for around here, and maybe you can also make a checklist of conditions that must be fulfilled before you can take this trade. All right, that there is a breakout here. Some people might enter wrongly and be taken out of the market prematurely, and you find the market still move down, accumulating a lot of pips, but they were taken out prematurely because they lack the knowledge of how to enter the markets effectively. All right, so a breakout from the lower time frame gives an opportunity to enter a selling position. All right, if you saw this market make this move and then pulls back here, return back to this point, you can see this is the first lower trend line here that touches it the second time. All right, it pulls back up to this one again. So around this time, somebody can take a trade. Okay, even these two, can you see these two similar candles, call them railway tracks, is actually a sign of markets moving in the opposite direction. You can see this. This also is an engulfing candle which supports the price movement in the bearish direction. And this is also a very, very key candle here. You can see the small pin bar here. This actually shows you the weakness of the bulls, the buyers, the weakness of the bulls. See, the bears gave this shot down, and the bulls could not even get halfway or even close the gap. All right, so it is a sign of bullish weakness, which should suggest price moving downwards. All right, so this is a bearish flag, and it's important that you follow the conditions that you have set in your trading plan to enter the trade when there is a breakout. So in trading or the continuation patterns, you are waiting for a breakout from your structure. All right, so let's move to the next. The next pattern is the rectangle, and of course we have the bullish rectangle and the bearish rectangle. What we have here is a bullish rectangle chart pattern forming in an uptrending market. You can see the arrows pointing upwards, so this is an uptrending market. This is an impulse. Price moved into this zone and now started doing some correction. You can see that this one is flat. This is a rectangle. It's not slanting like a flag. This is a rectangle. Sorry, I didn't point out something in the previous pattern. For instance, here we have the flag, the length of the pole. This is a flag pole. From here, the previous impulse should be your first target. Should be your first target. So the length of this pole should be your first target from the breakout of this corrective structure we call the flag here. So the length of the pole should be your next target. All right. Okay. So I thought to get that for you so you can see it again. The length of this pole should be your target, but in the case of the rectangle here, the first target, your TP1, should be the height of this rectangle. So from here to this point, you measure it at the breakout, you measure it, and then you get your first target. All right, using the Fibonacci retracement tool, you can find out some levels. Okay, we are at the point where market price retracement and also the extension, you know the first levels of the next retracement, so you can with that identify your TP2s and TP3s. But basically the height of this rectangle is your TP1 target, all right, for this structure. All right, so we go to the bearish rectangle. This is a bearish rectangle here. This is a downtrending market. See, price is falling. It fell into this zone and started correcting. It's trading sideways in a between support and resistance levels. There's a bearish rectangle chart pattern here, so we are waiting for a breakout on the downside. Again, look at this pin bar here. This actually is a pullback to the previous level of support, which has become a resistance. You can see that. So this is what we call confluence. So around this area you are pulling your trigger, of course, and this structure, this long bearish candle with this tiny pin bar in between these two candles is actually a structure that shows price continuation in the downward direction. This little pin bar here represents the weakness of the buyers, so it shows that the buyers are really not strong enough to pull this. And before now, you can see two long bearish candles, 1 and 2 here, and look at the little response of the bearers, so of the bulls, meaning that the bears have the market. All right, we move to the next continuation pattern, and this is the triangles. And in this case, it's an ascending triangle chart pattern. It's a bullish triangle. Price makes this bullish impulse, and starts correcting inside a triangle, and of course following the Pierre and Elliott's triangle corrective wave, you you'll identify about 5 waves inside this triangle, whether it's ascending or descending or any other form of triangle. But what is important to you here is to identify the impulse, and then there is a corrective phase. I told you that chart patterns are continuation patterns. Chart patterns, they are corrective structures, particularly the continuation patterns. They are corrective structures. Please note that they are corrective structures. So, price makes an impulse, then followed by a correction, an impulse, followed by another correction. So it is in the corrective phase of the price action that you look out for these structures. Okay, and then identify whether it's a triangle, is a flag, or is a rectangle. Okay, and what we are trading here is a breakout from that structure. There is a resistance line, and then here is a support line. You find out from here, this is the impulse. It hit the resistance level and drops down to establish both the resistance and the support, and push back the resistance down to the support. And it continues this way until on this day it broke the resistance level. And of course, when this happens, look at this big candle here. This is an engulfing pattern. You can see it here. It's a small bear candle followed by a longer bull candle. This alone should tell you that the correction is over, and then you'll be looking out for an opportunity to trade the market. When this breakout happens, you move your time frame to a lower time frame to find out whether there'll be a retest of this resistance level forming a confluence. Then you look for an opportunity to enter the market. All right, and of course your first target should be the height of the open end of the triangle. You can see from here down to this point, you measure it in pips, and then from the breakout point, that should be your TP1, and then you can continue to take your trades. All right, so the next is the bearish. The same thing, just that the market is trending in the bearish direction this time around. This is a bearish impulse, and here is a correction. It now starts to correct in a triangle form. You'll be the one to identify these, draw these trend lines here. Okay, this is a resistance, the upper trend line, and then the lower trend line, the support, a breakout from here. Again, you can see this engulfed pattern. You see this long candle totally engulfing the bullish candle. Is a power changeover. Is a changeover. This shows you that market is now ready to continue in the bearish direction. All right. Okay. So we'll move. Let's see more examples. You can see a triangle here. Is a bearish impulse. It corrects in a triangle, and here is a breakout from here down. You can take your trade. Look for an opportunity around the breakout area and take your trade, or you can apply all your entry techniques, the checklist of your entries, list of all the conditions that must be fulfilled before you enter a trade. At this point, you can apply that and locate an entry therein. Again, this is another bullish triangle in a bullish trend. Price moved into this place, and then you can see the correction. After the correction, you can see around this area, market has broken the upper resistance trend line, and then you can take a trade. Here is also an opportunity, this first pullback, opportunity to run another entry in the bullish direction. All right, then the next is wage. We have the bullish wage and also the bearish wage. The bearish wage is what we are seeing here. Price is trend coming downwards. That's why it is a bullish correction. All right, it's not a triangle because it has an open end. It's not necessarily will have to converge to a point. All right, and this is it. You draw your resistance line and then the support line. A breakthrough this support line, you can see it. You see this powerful candle here is an opportunity for you to sell the market. And here is the bearish, the bullish wage. The bullish wage is here. At this point, see it, the market is moving up direction, then start correcting. You can't call this a rectangle, you really can't call it a flag. So this is a wedge, a bullish wedge. The breakout from the recent line here offers you a trading opportunity to buy the market. All right, so move to the next pattern, and this is the last of the continuation pattern. This is a cup and handle pattern. We have the cup and handle and then the inverted cup and handle. This is a cup and handle in a bullish trend. And I tell you, this cup and handle is the most accurate. Anytime you find it, you can identify it in a bullish market, oh, it is a huge opportunity to build your account. You can see this massive impulse here. Market starts to correct. So it's just like a cup. You find this happen, a lot of times. You see, you're the one to draw this, okay? And then there's a handle here. All right, breakout from the upper trend line that's a resistance will tell you, give you an opportunity to buy the market. And your target is the depth of this cup. So from this high here to the low here, from this high, this point to the low here will give you, the number of pips to target for your TP1 from the breakout of the upper trend line here. So we have here the inverted cup and handle, and this is the one happening in the bearish market. See price coming all the way here, and it makes this semicircular kind of correction. So that's the cup, and then this is the handle. You can see semicircular correction, move again in the handle. So the breakout from this is a continuation in the bearish direction. All right. Okay, so we'll move to reversal pattern, and these patterns are the patterns that we'll see in an uptrending or downtrending market that tells us that markets will reverse, markets will make a U-turn, from the underlying direction. All right, so we have the bullish reversal patterns and then the bearish reversal patterns. We're going to be looking at the head and shoulder, the inverted head and shoulder, double tops and double bottoms, triple tops and triple bottom, and then we have the rounding top and rounding bottom. So I'll show you straight. The first is the head and shoulder pattern. All right, this you find head and shoulder pattern in a bullish market. Price has been moving, making higher highs and higher lows, okay, trending upwards. This time around you can see this high return, make another high. It's supposed to make another high after this high, but it couldn't, and that shows you the weakness of the buyers. Actually, the buyers are losing steam at this point. So when you find this pattern happen, you get ready to take a trade in the bearish direction, and this is it. You draw a trend line, neckline here, joining all the supports at this here, and you're waiting for the breakout here. All right, this is the head, the shoulder, head and shoulder. All right, so this is a neckline. Your first target is the height of the head, from the top of the head to this particular trend line. Okay, when the price breaks out, that should be your first take profit. You can continue to scale the markets, trade the market continuously until you can make out as much pips as possible, and this can happen in days, and even run into pips if you're a position trader. All right, so this is another example of the shoulder, head and shoulder. All right, this market moving in the bullish direction, but this time it made this high, made a higher high. So we're expecting to make another higher high around this area, but the failure to do that is telling us there's something wrong. Okay, there's a major decision which you, a technical trader, may not know. Okay, maybe there's a fundamental decision, something happening that is causing the trend to reverse. But this is a pattern that shows you that this market you have been buying, please, you have to be cautious and get ready to sell. Sellers are taking over. All right, so there's a neckline here. Breakout from the neckline should give you an opportunity to sell the market massively. And we have the inverse. That's the one we found in a downtrending market. See, price has been falling, making lower lows and lower highs, and gets here. This is the first shoulder, and it pulls the head here. You see, we're supposed to, the market's supposed to continue. This shoulder you're seeing here should be another low, but it couldn't. So this is another sign of the weakness of the seller. So the buyers are taking over. Draw your neckline, okay, joining this point and this point. Break out from these and retest or on that line should give you an opportunity to buy the market massively. And the target is from the neck, the head here down to this trend line. So around this area from here up to this level should be your initial target. Don't miss this. This strategy works every day and easy to identify higher time frames. Okay, you must first of all understand that what you are dealing with is an uptrending market. So move straight to the double top formation. Price is moving in an uptrending market. This time it hit a high, return to make a low, and refuse. There is a refusal here to make another high, but it just got to that previous level, okay, which is forming level of resistance and push is downwards. Okay, a breakout on this support line here, which is the neckline, should provide you an opportunity to sell the market, right? Okay, this is the inverse, the double bottom, and find this in a downtrending market is trending downwards. Here's a low here, push back to make a high and refuses to make another low, but is rejected at the previous level, all right, and pushes up. This is a potential. You have a setup here that you can use to buy the market. So break out on this neckline at this point and a retest. You can see the retest here to enable you to get ready to pull the trigger to buy the market massively. We'll move straight to the rounding top. We have the rounding top formation. This rounding top pattern, so effective, is very accurate when you are taking it to trade. You know, this is a bullish rounding top, right? Price has been moving in an upward direction. It got to this point, you can't call this double top, you can call it triple top. There's no other thing to call it except a rounding top. All right, so from the high here to the neckline, which is the support line, is your target. When the price breaks this neckline, is your initial target. You can see it how the market moved all the way down. So here should be your TP1, and then you continue to trade the market as the price moves downwards. The next here is the inverse of the is a rounding bottom. That's the inverse of the rounding top. Price has been dropping. You know, these are downtrending markets. It moved down here, pushed up, returns here. You know, so as it did this push up to this level, we were expecting it to come downwards, but it couldn't. Okay, that suggests something. That suggests a reversal. This is a rounding, you know, bottom. So at the neckline around this area, in the price breaks and retests, you can take your trade, your buy around this this area. Okay, this is come to the end of this very important discourse. I would like you to hit that like button, subscribe to our channel, and visit our website so that so many other people can have opportunity of sharing and having this video. I believe you learned something. If this has helped you or is going to help you, please would like you to share videos with all your contacts. See you again in the next video. Thank you.